Hey friends, welcome to today's Singapore Market Digest. I'm Iggy from the Investing Iguana, and today we're looking at some interesting movements in the Singapore market. From semiconductor equipment manufacturers to trust operators and even the Singapore Exchange itself, there's plenty to unpack. So grab your coffee, sit back, and let's dive into what's moving the market today. First up, let's talk about UMS Holdings, a key player in the semiconductor equipment manufacturing space with the ticker symbol SG eyebrows. The biggest story here is the wave of upgrades the company received from three major brokerages, UOB, Kay Hian, Maybank, and DBS. These analysts bumped their ratings from hold to buy, setting target prices of 121, SWON 16, and SWON 31 respectively. Why all the love? Well, despite missing consensus earnings estimates for the full year ended December, UMS is expected to see revenue growth in FY 2025 thanks to ramped up production of both new and existing products. Now, when we look at trading volume, it's clear that investors are paying attention. The stock saw solid activity as traders digested the news of these upgrades. Technically speaking, UMS has been consolidating around the SWON 10 mark, which could serve as a strong support level moving forward. If the company delivers on its growth projections, we might see a breakout toward those higher target prices. But keep an eye on broader semiconductor industry trends too. This sector tends to be cyclical, and global demand plays a huge role in determining how companies like UMS perform. Switching gears, let's move over to Netlink NBN Trust and ComfortDelGro, two very different businesses, but both tied to significant index-related developments. Starting with Netlink NBN Trust, SGXCJLU, it's set to replace ComfortDelGro, SGXC52, on the reserve list of the Straits Times Index, STI. For those unfamiliar, the reserve list includes the 5 highest-ranking non-constituents of the STI by market capitalization. This means Netlink now stands ready to step in if any current STI constituents become ineligible before the next review in June 2025. Units of Netlink ended flat at $0.855 on Thursday, while ComfortDelGro shares climbed 2.1% or 0.03 to close at SWON 45. What does this mean for investors? Well, being added to the reserve list isn't just symbolic. It often brings increased visibility and potentially more institutional interest. That said, Netlink operates in the telecommunications infrastructure space, providing fiber broadband services across Singapore. It's a stable business model, though not exactly one known for explosive growth. On the flip side, ComfortDelGro remains a heavyweight in the transportation sector, offering everything from bus services to taxi operations. Its recent uptick suggests investors still see value in its diversified portfolio, even as it steps off the reserve list. Both stocks trade within reasonable valuations, making them worth watching depending on your risk appetite and investment horizon. Finally, let's turn our attention to none other than the Singapore Exchange itself, trading under the ticker SGX.S68. As the backbone of Singapore's financial ecosystem, SGX announced some noteworthy changes to its leadership team this week. Lee Beng Hong, head of wholesale markets and platforms, is stepping down after nearly 6 years in the role to pursue other opportunities. Taking his place will be Jean-Philippe Mail, co-founder and CEO of BitFX, an FX over-the-counter platform acquired by SGX Group back in 2020. Mail will officially take the reins as CEO of SGX FX starting April 1. Additionally, Thijs Jacobs, the group's chief technology officer, is also leaving, with his responsibilities temporarily covered by Chief Information Officer Tinku Gupta until a replacement is found. Despite these leadership shifts, SGX shares edged up 0.4% or 0.05 to close at $13.22 on Thursday. From a technical standpoint, SGX has been holding steady above this 13-line mark, which historically serves as a psychological support level. Given its status as a blue-chip stock, SGX tends to attract long-term investors who appreciate its consistent dividend payouts and relatively low volatility. However, earlier this year, shares took a hit after initial proposals from the Monetary Authority of Singapore, MAS, review group dampened investor sentiment, causing the stock to fall nearly 6% in February. While short-term fluctuations are inevitable, the exchange's strategic moves, like integrating BidFX leadership, signal efforts to stay competitive in a rapidly evolving financial landscape. Keep an eye on upcoming dividends too. SGX typically rewards shareholders handsomely. So there you have it, folks. A snapshot of today's movers and shakers on the Singapore Exchange. Whether you're bullish on semiconductors with UMS, intrigued by index dynamics with Netlink and ComfortDelGro, or keeping tabs on SGX itself, there's no shortage of opportunities to explore. Remember, investing is about patience, research, and understanding the bigger picture. Thanks for tuning in, and don't forget to subscribe for more updates. Until next time, happy investing.